Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 22nd, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 439. So today I've arranged for several guests to join us, and also all of this week's guests will be on our next Synergy Trader event, which starts tomorrow. And this will be Synergy Trader number 52, and it will be entirely about everyone's favorite indicators for trading. So be sure to join us for that. That's Tuesday, Wednesday, and Thursday, July 23rd, 24th, and 25th from starting at 10 a.m. Eastern Time. And you can just come to TimingResearch.com, and there will be links to join the live room on the site. So today I've arranged for Adrian Manz of TradersInsight.com to join us. He's been on other events, but this is the first time he's been on Crowd Forecast News episode. So welcome to Adrian.
Hey, thanks for having me.
And also Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, as well as Sonny Harris of MoneyMentor.com. And the Option Professor of OptionProfessor.com is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great, David. Nice to have everybody here. We had big news in the last 2 weekends with Trump assassination, and now we have Biden getting out. So last couple of weekends been pretty wild for the news. Let's see how the markets are going. We're going to start out by looking at the S&P 500 and get an idea of what you guys think might be happening here as far as between now and the end of the week. Sometimes on these Monday shows, we like to get a short-term perspective. So let's start out with Sonny. Hey, Sonny, what are you thinking here as far as the S&P is concerned, both short-term and long-term?
Well, long-term, we're going up, I think. But short-term, I think we're going to go down to what I call an attractor at 5,400.
Okay.
So I think we're going to move down this next few weeks over to 5,400.
So you're viewing this rally a little bit skeptical.
A little bit.
Yeah.
Yeah.
And Adrian, what are you thinking as far as what we're seeing here today or for the short run?
So I've got I've got levels on my charts that I'm looking at for. We trade mostly the NQ and the ES when we're looking at the futures at all. Mostly the NQ, but on the S&P we're looking at 50. I've got 54.48, 54.50 as sort of a next inflection that we'd probably go long the ES from.
What number is that, around 54.50?
54.50, yeah.
Yeah, I had something at 54.60, so it's in the same neighborhood.
Yeah.
Today doesn't look like we're going to get it, but today is a day, and we'll have to see how it goes. What are you thinking on the NASDAQ? Did you have any particular level you thought looked interesting there?
Yeah, so we picked up the inflection at 19.5, like 505 on Friday. We were still looking for it to come back down in there and take another bounce. So we have sort of a funny way of trading. We trade the NQ from the QQQ. So I have that set up.
Oh, okay.
So the Qs give you a little bit less noise, and you can analyze things a little bit differently when you're using the volume by price. We use sort of a hierarchical cluster analysis on volume by price, and there's a real significant node there right around 19.505. So if we get back down there, we'll pick it up on the long side, and if we get up into 19.560 today, which I kind of doubt, then we. All right, I'm sorry, 19.960. Then we'd look to short it.
Yeah. Well, there's a lot of buying coming in today. There's no doubt about it. So if you were short, it looks like they're covering, and if you want to do some spec buying, it looks like that's going on today as well. Michael, what are you seeing on the stuff that you're looking at as far as either the waves or the Fibonacci's or anything helping you to figure out where we're going on S&P right now?
Yes and no. I also deal very much with the option flows and how they're going. And right now we saw a lot of reversal coming out of options expiration from last Friday. And actually they prepared for it Thursday and Friday when we had those two big dumps down below. In the S&P, it got down to just points. They actually traded below the put wall, which is an area that should provide support and support that holds. And the deal was, it's like if they substantially broke below that, it would have just pulled the plug and opened the door for a quick drop down to what you guys were talking about, 54.50. And then of course that didn't happen. And then as they started to buy it up, you saw how quickly they moved the cash up and away this morning from that 5,500 level. So what I also see coming in to play again, which I'm not sure why they just continue to do the same trade, but it's called the dispersion trade, and there's another name for it, where they're selling the VIX and they're taking that capital and they're just putting it into the underlying or the component parts of the S&P and the NASDAQ. And particularly in the NASDAQ, we're seeing them, they initially came back into Apple, but now they're really piling back into Meta. They're moving back into Microsoft now after the big ordeal. And that's providing a lot of support for the market. On an Elliott basis, the market was doing really well on getting itself lower. This is the NASDAQ and the S&P on getting itself lower in what I'm considering a minor fourth wave decline. Was still yet to come. We have still a minor fifth wave up. I don't know, let me know if somebody's internet connection isn't stable, could be mine. We have a fifth wave up in a minor degree. That'll take us to new highs. Then that finishes an intermediate third and we come back down in the correction, but we go back up in that correction. So I'm expecting two periods where we will make new highs in both the S&P and the NASDAQ above what we've already done before. And I'm looking at that before the end of the year, actually.
Now, since we're obviously made a turn down here, I think another important thing for us to get your guys' opinion on is where would this thing stall out if it is going to stall out? Because let's just take a look at ES, because a lot of you guys trade the E-mini, and so let's put ES up there. And then let's go around and find out where it could stop. I know Sunny has technical indicators on her Sunny bands that would give us a number, and basically get a little bit of an idea what you guys think about that. So let's start out with Sunny. Sunny, if this is obviously a strong rally today, where would it possibly peter out if there's still more downside to come?
Well, if you want to see where today's going, I think right now it's pretty much up against this high for the day. It went straight up this morning and straight back down, and now it's up again, but it's not to the high of the session yet. And I think when it gets to the high of the session, it's going to back off and go back down to my DMA, dynamic moving average, which is about where your gold line is there. Well, no, it's about halfway between your gold line and your blue line. So you don't have the Sunny bands on this, but I'll show them after a while and you can see it. It's going to come today to the lower inner band at 55.31.
But on the more about not where it's going to come down to, where do you see that there could be some area of resistance?
Well, the support will be at that 55, whatever.
Yeah, but my question right now is on all you guys is that we have a rally going on now. And how far do you see this rally going if, in fact, it's going to hit resistance? What numbers are you looking at there?
I think it's almost to where it's going to go. The resistance is 56.07.
Yeah. I got something in at 56.05, so it's the same kind of neighborhood. Turning to Adrian, do you have anything you see there that you might think it could slow down at, or?
Yeah, hang on one second. You know what? Maybe come back to me. My chart just crashed on that one.
Sure. And I had a chart that showed a gap, but then I have other charts that don't show a gap. Does anyone show that there was a gap around 56.40, or there is no gap? It was filled.
I don't see a gap
because it broke down at 56.40. That's where it started to accelerate to the downside.
True.
Yeah, I don't see a gap there either.
Yeah, but that might be a logical place that if they, obviously right here in this neighborhood, there seems to be obviously some resistance ballpark. And then if they got through this, the next logical point might be from where it broke down from, because obviously former support could become resistance. So that'd be around 56.40. What do you see, Michael?
I have
Yeah,
resistance,
glasses,
fib resistance at 5610.
Okay.
I have, and this is on my hourly chart. Also on the hourly chart, I have the 200 period moving average at 5625, but I have 0.382 resistance at 5610, which is a natural stopping point if this is just going to kind of go up. If it's actually moving up in the wave pattern, then I think it may be, then we stand a chance of it actually getting to 5632 to 5653.
Yeah. Because that's the ballpark area where it dropped from, when it started to accelerate. It was kind of like it went down there and then it took a bounce above 5660. And then that, that 1, 2, 3 formation, when it takes out that low, that's when everyone gives up on it. So it's kind of classic stopped for a while,
Right.
bounced.
Right.
And then once that bounce gave it up, then everyone said, well, if the bounce is giving it up, so am I,
Right.
So very interesting. Now, Adrian, how's your machine working now?
Yeah, I got it back up again. I just needed some glasses here to figure out what the heck was happening with the futures. So we trade futures on futures we're doing on TradeStation and everything else we do on Realtick, right? So it's sometimes they don't play well together, especially when
Right.
we're traveling. But I've got like, I mean, it's the same ballpark, 56. So we've got it marked. We do a lot of counter trend trading when we get into resistance. So we've got a short out there actually at 5607.
Mm-hmm.
With
What are you guys showing for the high today on that? About 5608?
Yeah, 5608.25 I've got.
Yeah, so it hit your number pretty good there.
Yeah, and then it's I mean, it's a pretty wide swing, right? That
Yeah,
we
they are.
have going on here today, especially, it's we usually, like I said, focus on the NQ. I like this one when things get volatile. We like to switch to the ES because it's a little bit more manageable. But the target on that was 55.92, which was too shallow. But
And a quick note for people who are listening on the NQs, isn't the liquidity a little bit skinnier than the ES, and therefore,
Yes.
the bid offers and trying to get in and out and slippage and all that can be really a headache?
Yes.
yeah, you can slip. I mean, it depends. This is the primary reason that we're using the Qs, so you don't have a heart attack when you're watching the NQ. So we've got it
Right.
set up pretty well so that the timing on it goes from the QQQ, and then we just don't pay too much attention to the wiggle on the NQ because it can be a pretty minor move on the triple Qs that you're looking at, and then if you look over at the NQ, you're like, holy cow, it's there's a lot of almost looks like they're gunning for stops, right?
Yeah.
But,
And I was going to, one other question is, like they used to in stocks have a specialist book, and the specialist would know where all the open orders are and all that kind of stuff.
Right.
Is there a way of people keeping an eye on where the futures may have open positions, or that's not really
Book map.
available?
Book map.
And
Look,
so
yeah,
Book map is the best that I know that they show where resting orders are.
that's what I mean. Yeah.
Or just block orders, or any type of thing. And what ends up happening, from my experience, is those levels, higher or lower, turn into magnets,
mhm.
Yeah.
and the algorithms
Attractors.
just go for them.
Yeah.
We actually do that with stocks. We use the New York Stock Exchange open book. We have an algo that goes through and looks for block trades there, and then if it looks like there's a block trade sitting way up above the market, we'll start buying because we know it's going to head to that block because you can the order flow there.
Yeah, they're magnets.
Yep.
Yeah.
Keep doing it.
And so that's pretty much the story on the stock market right now. We had a low put in there, and now today you have a lot of buying coming in. And then those levels we just mentioned would be levels of concern. And ballpark, 5610 ballpark, and then maybe 5650, something like that, ballpark figures, right?
Mhm.
And then we'll have to see from there. I didn't see much divergence down here on the RSI when it did hit the low. So that would be concerning to me that it didn't look like all the selling was dried up at the lows from the standpoint of the momentum. So we'll have to see if this thing goes down and test it again. Let's swing over to something that I think is kind of exciting right now, which is the price of oil. I watched the Goldman Sachs commodity index pretty closely, which is half oil and then the other half is grain and gold. And it tried to get through 600 a couple of times in May and June and really turned down. And then, of course, you saw gold back off 24.75 and oil back off 85. So are people going to get a surprise when and if oil breaks under 77 and 75 and maybe actually goes down? What are your thoughts, Sonny?
I think that oil is going down to 76.80. That's where the lower sunny band is right now.
Yeah,
And I
yeah,
think that's
yeah.
where we're headed, 76.80.
Yeah. And
That's
that'll be a little bit
daily
of surprise who, people who thought at 85 it was on its way to 90 or 100, right?
Mm-hmm. But it's really interesting. I in my Sunny Side of the Street newsletter, I include not only the analysis of the crude chart, but also the price of gasoline in my neighborhood.
Mhm.
Now, albeit it's expensive because I'm in California, but for the last 4 weeks, it's been $4.99 a gallon, unmoving. Normally it moves a lot, but it's like it's price fixed at $4.99.
Well, and a four handle in California is a bargain.
That's right.
Sort of.
Yeah.
Good.
One thing that I'm noting though on it is that a lot of my moving averages haven't actually crossed and are not all pointing down. The near term one, the least amount of time, that's rolled over a little bit. But if this thing does hold 77 and 79 and starts taking out 82 again, boy, that would change my opinion pretty fast. So on the upside, well, let's finish up with, finish your thought here with regards to the upside. What do you see on the upside, Sonny, before I switch it over to Adrian?
Well, I don't see much on the upside, but if it were to go up, then 82 looks like the limit to me. 82.22.
Yeah. And if it started to break above that, you might change the song a little
Well, if
bit.
it breaks above that, then that's the upper inner band on my sunny bands. If it breaks above that, it's going to the upper outer band at 83.32.
Yeah. And then you don't know if it gets legs for some reason, that could be but right now it's on the defensive, and that's the main thing. Right now it's on the defensive, but
and the high in March was at 84.92.
Yeah. Yeah, that 85 number is really the key if you want to see a big move. What are you thinking, Adrian, on the oil?
I don't know. Again, for me, we don't trade oils and banks we watch this stuff, right? But we don't trade it as a rule because of the geopolitical volatility. There's too many things that influence price for us on an intraday basis. But I'm going to say I watch it, and 80 for me, it's like 82 down to about 76 is the line that I expect this thing to travel in. And yeah, we live out in Malibu. It's 5.50 a gallon.
Yeah, right.
So it just it sure doesn't. It feels like there's a lot of price persistency, and I feel like it's headed higher. If anything, it's probably back up into 82, and then maybe back down to 80. But I just don't see where it's.
So you're looking for choppy, basically.
Yep.
Well, and then maybe in Q4 things will change.
I'm hoping.
Yeah,
I think so.
Now I know.
Got to drive down the hill, and you spend a gallon of gas getting to the gas station.
Right.
Now I got a quick one for you, though. I know you do focus a lot on individual stocks, don't you, Adrian?
Yes.
Okay, so let's turn it over there. My feeling is that if there's a lot of drill going on, it could be very good for the oil servicing companies. So two companies I thought would be interesting to keep an eye on would be Schlumberger, who deals in drill bits. So can you put up SLB?
Got it.
And maybe you could give your view on that, because I thought that this could really be a beneficiary of drilling, because that's what they sell, drill bits.
Yeah. So if they head higher, then it's not a ton of upside, but if it gets above 51, then I would be looking at like a 53.32 print for sort of a short-term move, and then up into 55.14 would probably be the upper end of what I'd be looking at. Intraday is what we really focus on. So if I'm trading this thing intraday right now, then anything above 40, 49.65, if it comes down, test 49.65, or it comes down into maybe 49.35. again, that was the sort of the low band today, and there's a big void there in the cluster analysis. So that was a real easy place for it to, as price moved lower, it was catching less and less significant volume, and then it hit 49.33, and there's just a brick of, when you're looking at a cluster analysis, you're looking at where the important it's sort of the important volume in terms of what happens next. How much impact did this have based on the following ticks, and that sent it all the way up into 50.52. So I mean, there was a buck on it there almost.
Yeah. How about one last one on that, and then I'll ask Michael about it as well. Oxy, OXY.
Incidental.
Yeah, I mean, I'm looking at this as a longer term play, because you can see on a longer term basis it might be going someplace, and if they go for that drill, this is good stuff for that. What about Oxy though? It's right there on the ledge, huh?
Yeah, and it's sitting right on top of again, it's sitting right on top of a cluster. So if it manages to stay on top of the prices that about 60.85, then it would have. I mean, we look at a lot of these things in terms of ease of motion, ease of travel. So you'd have a pretty easy move up to 64.80, and then there's a gap in the cluster analysis that says it would be relatively easy to get up into 68.05.
Yeah, I live in option land, and I'm glad I brought this up, because now I can see it looks like a good candidate for a strangle, a call and put at the same time, going out a little bit in time. Maybe by the end of the day, that could find a home in my account, actually.
There you go.
Okay, Michael, let's go over oil. Start out with the price, CLQ.
Okay. There's a couple of things. From the mid-July high that it reached at 82.27, and best I can see, it basically has done an AB and then a nice big C wave down, and that would be to this morning's early low at 77.55. So it's bouncing up off of that. Now, whether it's just 1, 2, and then that's a big 3, and it's coming up in a 4, and it's going to go back down and complete a 5 down, which in my mind would suggest it's got a lot more to do to the downside. Now, that was on an hourly chart. If I bring it out and look on the daily chart, support coming down now. It's gotten back above, and it's resting around 78.27, which is a support, a fib support line. You got the 200 right below it though at 77.07, and that's the daily 200. So it tried to break that. It was not. I would think if it came down again and broke it, then we're headed to 76. And if it breaks 76, there's not much in between that and 72 to give it some support. You got a couple of levels of price support right there at 76. The next one would be about 73, and then you got 72.50. The July or the June lows could get challenged, but if it breaks those, then it's like sayonara. It's coming off in a much larger, more destructive decline, as it did back in September of 23 off of that high, all the way down to the December low. And right now, I really would not be expecting that. We may get something that'll drive us, could drive us down to the high 60s. But I think ultimately it still has more room to go up than it does to go down.
Yeah, it does look like there's an abyss underneath the support right there.
There is.
You wonder if it's going, like, Sonny likes to call the moving averages and stuff like that attractors. And you can see sometimes it goes way away from its attractor. And right now, I'm wondering if it's a situation with that RSI pointing down like that, if it's potentially going to go and give you a May-like movement. Where it gets where it goes way away from the average and gets everybody pretty much flushed out,
Right. And again,
there's a risk of that.
It is. And I don't know, because I don't trade crude as actively as I have in the past. But I do know that there was also, and the cycle peaked late. So there was a cycle that was due to peak way before it got to 81. It should have peaked around 75 to 78, and it didn't. It went right on through it. So the cycle peaked late, which kind of puts the cycle off a little bit since we were already looking for downside. And that downside move off of those lower levels projected it could have gone down to 68 to 65. So again, now that we got up higher, do we make an adjustment? So I've not really gone back and done that cycle work to see how that all fits in. But the downside activity now is picking up because the cycle is pointing hard down.
Right. All right, let's switch gears here and go to the price of gold, which has had a very big move this year, but seems to having some problem. But I think it's up today. What's gold look like? The 24.75, I guess, has been the high, and the RSI, clearly is lower than it was during that big run up earlier in the year.
Right.
Let's turn over to Sonny. And Sonny, let's give an input on the gold.
Well, gold's one of my favorites, but it is down today. We were down 2.8, $2.9, $3 right there. It's moving. So it is down a bit. I still think we're going for 2,500 though, but it's going sideways right now, which it has been doing for, well, since April. So
how did the bands look?
Well, the bands are just sideways as can be. We're right now at the DMA, so it could go on down to, let's see, well, we've got the 21 and the 55 moving averages right below current price.
Mm-hmm.
It could use that as support and bounce, or it could drop on down to previous lows at 23.20. I won't be happy if that happens, but it's a possibility.
Yeah. Well, that's what it looks like pretty much. Turning over to Adrian. Adrian, I know you're probably not following the commodity gold. You might obviously be aware of it, but as a stock, Newmont Mining, there's two of them I'd like you to talk about. One is Newmont Mining. They both have earnings this week. NEM.
Right.
And they both have earnings, so, it could get exciting.
So NEM, we trade Newmont quite a bit. We trade Barrick, we trade a few of the mining companies, Agnico. I think this one, $49 is probably the place it's going to test. It has, again, on Newmont, it has down below here. Hang on, let me just pull it up over here. So if it gets down and tests below 45.80, then we've got this big void down to 44.70, and then it runs right into just a really, really heavy, cluster of volume. So I would think it's probably going to bounce before that. But up top, 48.54. I mean, the last time that we had it was early in July. It was on our trading plan. It broke out of sort of that 42.17 range that was trapping it. We had I call that like a line drive setup. We've got a bunch of things that are on our stuff that are around a baseball analogy. And that trade, that was a good day trade, and it was also a really good longer term trade, longer term swing trade. So we were 42.17 was the breakout. 43.73 was actually the signal, and then first profit target on that was 44.70, and now it just took off. The second target was 47.37, and then now we're looking at this little pullback here. 47.37 is an entry again with a target up around 48.50.
Let's turn over to Freeport McMoran, FCX. It's the copper trade, and it looks like the infrastructure bet got pulled back a little bit lately. But it's right there on there could be a very critical area right here, huh?
Yep. So, again, in the, boy, I hope people. So I wrote this book, Around the Horn, right? That was a great seller in the stock side of things. It was written around this baseball analogy. That pattern right there on the daily chart is this thing I called a backdoor slider, where you're looking at make or break in terms of you had an expansion range and volume to the downside from about 48.38 down into 45.47, and then the way that it's just sort of clustering up inside the bottom of that bar, the lower part of that range, lower 25% of the expansion bar. Expansion bar was on 718, I guess. The way that broke down there, if it gets down below there, 43.74 would be our target, and it would really have to move back up above 48.38 before it'd be on our radar as a long, and then our target would be up around 51.44.
Yeah, it's definitely at crunch time, and it has an earnings report this week, so I'm sure it'll be never a dull moment by Friday on this stock.
Yeah, this will be on our trading plan for tomorrow for sure as a slide. So,
yeah. Michael, how are you feeling about gold? And if you want to opine on the mining shares, what do you think?
As far as gold, I think that gold remains, like you mentioned right when we started. If you're even looking at say a 4-hour, but I'll look at it daily, it is really just still in a box, even though basis the August contract, it got up to 24.88 last week. It just still is, in my opinion, in an Elliott fourth wave. And what it's completed, and this all started off of the May 20th high, and that's the one that was 24.76. And so from down to a low in June, at the end of June at 23.04, and that remained strong support, but then it ran back up and then it just kind of died. It got totally rejected off of those highs. So that just kind of brought me about going like, it's a big old flat, an ABC flat, and it's going to come back down and find its support again around 2300. Now, if it plows through that, which we know gold has the capacity to do that, then I've got additional support at 2251 to 2210. Now, a little bit longer term, I still have an upside target at 2580. So, every time I see it kind of go up there and give an attempt, it's always like, are you early or are you actually going to go do it? And every time they come back, the market's like, no, I guess we were early, and they just turn it and slam it. And so, but it's also just cyclically, it's also a time when precious metals kind of drop off a little bit. Why they choose these months, I'm not sure. But I've got palladium also in a down cycle, and it usually comes in right before all of the producers and the people that actually use physical palladium in product step in, and they start purchasing for their next year, for next year's budget, or even for the end, for however long they go. So I'm watching some of my people that I provide to in palladium step back in, or platinum, I should say, not palladium, excuse me, platinum, that they're stepping back in and they're starting to buy, but they're just going to dollar cost average on an order, because again, we're all waiting for that period where the users and commercial, they come in and they buy what they're going to need for next year. And so not that gold should follow that, because gold, I think, is just under a different umbrella, so to speak. I still, just like Sonny said, I am still looking for higher. And I think just the next target is 2580. I think beyond that, I've got targets at 2825, and I've actually got targets up at 3000. And so I do suspect on a little bit longer term that the market conditions will contribute to the fact that gold will go like, okay, we're the storehouse of value, not you guys. And, it could swirl around interest rates, Jim. We all know that story. If they don't start bringing them down, the market's going to get very dissatisfied. But again, I think there's too many other things that get rolled into gold that we can no longer look at the markets or even the individual sectors, or like gold or precious metals, in the same way that we did before.
Okay,
because there's so
got
many
you.
ETFs.
There's so many factors. There's so many things going on. I mean, the central bank, blah, 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 everything's going on. It's hard to pinpoint just one set of things. There's two markets I think are very potentially exciting, and I'd like to talk to them very briefly on each one of you guys. And then I'm going to turn it over to you guys to individually present some of the stuff that you actually do for people. Let's start out with two things that could be very exciting. One is obviously the AI trade. and it had a pullback. So let's look at SMH. And, all the moving averages I've got still haven't crossed to the downside. So you could, I'm going to switch this over to Sunny right now, and then we're going to go around the horn. But Sunny, let's start out with SMH briefly. What's your feeling on that? Because this could just be a pullback and it could start going crazy again. How's your feeling?
Well, your blue moving average here is, I guess, your 20. I use the 21 because Fibonacci number and not quite exactly what everybody else is using. But that's a line in the sand right there. Is that a 20?
It's actually 50 and 200.
Okay. So
but I can change 50, it if you want.
No, that's okay. The 50 on this chart is where the resistance is right now. That's the attractor is that, and you can see hits it, goes below it, hits it again. Right now, it's just slightly above it. But I think that's where the line in the sand is. And I think, what do I think? This is higher highs and higher lows. So I think we're going to go back up and fill that gap.
Okay, so right now, definitely you're feeling along the line. We had a pullback in it. The story hasn't gone away. And basically, we have a good shot of maybe holding this support, rolling up into that support area, that gap area. Okay, yeah, the other one real quick, because we only have so much time. I want to make sure we get to it, is Bitcoin. And let's use IBIT, IBIT. I looked at the volume on that on Friday. It was 46 million. So apparently somebody's trading it, right? And so what do there are guys like Tom Lee who are saying Bitcoin is going to go way up through the roof by the end of the year. This stuff has had a correction. Do you see this as a potential exciting place?
There's a trend line going from your March high. If you go down across that to the June high, I don't know whether that trend line is broken at this point or not, but if it is, yeah, right, it's not yet. So that's the goal, right up wherever 40 or so on that. So that this particular instrument looks to me like it's going up to 40. Bitcoin in general, I think it's going to go to 80,000.
Well, then apparently this thing might be a beneficiary, and that blue line might look pretty much like it's made out of
long gone.
Yeah, it might be long gone by then. Okay, Adrian, again, these two guys, SMH, let's put that up, and then IBIT, and see how you feel.
So SMH, you've got the your blue average there is right on top of, again, a big volume cluster and the anchored VWAP. If you do an anchored VWAP of the trend move of the last swing move higher there, it's right at 258.45, which lines up really, really well with those bottoms at 255.60. And just now, as it's moving up through there, we would look to go long on this up into 271. What do we have marked here? 271.72. So 271, 65 or so would be where we would put the exit on that. And there's a big volume cluster up above there at 278.04. That's not really a surprise because that's where it sold off from the first time. So if you go back into sort of mid-June and you look at that sell-off, that volume cluster there is huge. And then, when it got back down through there again from the recent high that it put in, again, that volume cluster just kept growing and growing and growing. So, the way these things work is it pulls them out as they become less significant, and it stacks them up as they're more significant. And that area there has just been increasingly building.
How about on the IBIT?
So IBIT, sort of the same story. I mean, I'm not following Bitcoin that closely, but I mean, if I'm just looking at the chart and looking at it the way that I look at any other chart, then I would say, 3970 is going to be, that would be the test that I'd be looking for. And if it got up above there, then, I kind of think another stab at like 4105 is going to be something that'd be pretty easy to pop up through. If it gets down through 3616, then I'd be looking at 3230 on the downside.
Yeah, that gap is a little bit scary if you're buying right now, but
Yep.
That kind of thing. On a short-term basis, obviously anything could happen, so it could obviously come back and pull back and then go on its merry way later in the year. Michael, a little on SMH and IBIT.
Sure. SMH, I feel that the high on July the 11th at 283.07 did complete a larger five-way pattern up, and that what we're in now is a correction that is going to be equaled by or equal to what we're seeing in the S&P and in the NASDAQ. More so in the NASDAQ because that houses the Mag 7 and also a lot of the other AI component stocks. Now, but what to me, what's really going to propel this is the fact that the AI sector has gotten so overbought that it just tumbles, not because there's any problem with AI. It's still a solid new sector that will play out and have much greater impact on how we live in the coming months. But I think we know we need to pull back. So I think that the drop that we got down to and the gap will remain. If anything, they may get up and they may try to get to the gap. But I think that gap hangs, it sticks until we're done with at least the first 5 down, which would be an A wave. So I'm looking for a fourth wave correction. And way that normally does, you go out and you look at the previous fourth, and that's where I would expect it to actually get itself into. And
Okay.
that price range is 238 down to 198.
All right, sounds good.
And so
All right. Yeah, I got
that
you.
would-
I got
that
you.
would
It
bring
looks
that in.
yep, perfect. Right now I'm going to turn it around here so everyone has a little chance to put their charts up themselves, explain a little bit how they view things. If you have a favorite market or some kind of a thing you want to focus on, this would be the time to do it, and also explain how you help people and how they can get a hold of you. So we're going to start out by Sunny. And Sunny, why don't you put your stuff up there and explain some of the things you're looking at that you think are very interesting, and also, like I say, how you help people when they call you.
Well, that's a lot to put in one sentence here.
We we have enough time for at least 3 sentences. No.
Okay, well, let's talk about what I do first. I am a mathematician. I've been trading for 43 years. I'm also a programmer and author of 9 books, including the new Definitive Guide to TradeStation's Easy Language and OOEL programming. I love to do one-on-one coaching and custom programming. And I do a free podcast of famous and legendary gurus, so you can listen to that. And I love to teach people how to trade. Now, as far as sharing my screen, you have it, right?
Oh yeah, I see it.
Okay, so this is Tesla, which is I like to trade the Magnificent Seven. It's just a lot going on that way. And this
Absolutely.
is a weekly chart of Tesla. And you can see here that we've got, I keep talking about these attractors. So if we go from here to here, you can see we have exceeded this trend line. And I think it's going up then to draw a horizontal line right here, which is at 292. So on a weekly chart, that's where I think Tesla's going. On a daily chart, it's still going to that same level, but it's right now at a flat DMA. The dynamic moving average has purple on top, which is bearish, and it's at that flat level. So it could come down to the 21 moving average, but I think it's gonna, well, we've got an earnings report coming out this week, right? On Tesla?
Tomorrow.
Tomorrow. So we'll have some movement on that, and by chance it's going to be down because I don't think Tesla's earnings is going to be really good tomorrow. I think they're going to have a few problems. So that's one of my favorite. Another one that NVDA, type it. The other one that I like is NVIDIA. And you can see now it's below the DMA, purple on top, we're below the 21. See, it says less than 21, makes it easy, but it's still greater than the 55 moving average. And I think we will drop to that level and then bounce. And if it bounces and goes above the DMA, which is flat right now, then I'm a buyer again. Right now I'm in cash on NVIDIA. But
Okay,
those are my two favorites. And then of course, Google, which is doing this. They're all doing the same thing. They're rolling over, coming under the DMA, trying to do a little correction. I think the attractor on this one is at about this level, so it's almost done with this correction.
And Google has earnings coming up too, so that'll be news coming up too. Huh?
Yeah,
So
isn't it Google and
the
Tesla
contrary
tomorrow?
to that is the DMA histogram, which is this colored bar with a zero line across it. It's going under the zero line on the histogram, which is negative. So it could just as easily go one way as the other.
And with the earnings coming out, you'll get the stimulus probably.
Yep, we will. And then the other thing I really like is gold. And I trade the ES on a 5-minute chart every day. Oh, and I have a live trading room. You can come in on Wednesdays and see me trade live, or you can subscribe and we can do it together every day. But, and we're up 221% so far for the year in the trading room. So we have up and then down, up and then down, up. And I think we're going to go down on gold, at least to the 55, which I don't like. I love gold, but there you have the chart.
Everybody takes the time out, even gold, right?
Right. So that's anything else you wanted me to look at?
Well, no, I just was wondering if you, well, why don't you look at that SMH real quick and see if there's something there that we didn't see somewhere else.
Yeah, well, there's an attractor horizontal line right here. It hits it several times here, hits it several times here. That's the preponderance of price activity, and I think we're going down to that level on SMH.
And yeah, there's and let's look at IBIT, and there's one other one that would be interesting.
What's the symbol for that?
IBIT.
Oh, that's
there go IBIT.
one thing. Yeah, yeah. I think that's coming up to. Let's see. We've got a trend line going down there, so we're going from here to here on the trend line, and so I think that we're going to go up a little bit to this level, possibly retrace and close the gap, and then I think it's going on higher.
Yeah, that might be the bargain, huh? You'd be a little patient here. It has some resistance. It pulls back and fills the gap. Then it starts taking off again. And that's when the train looks like the one you want to jump on.
In my live trading room, we call this SOH.
Yeah.
Sitting on hands.
Yeah. No, because like I say, if these guys, and they're not the dumbest guys in the world, think it's really going to make a big move on Bitcoin, taking a little bit of a position on something like this obviously would make some sense because it has a significant upside if these guys are half right on their targets.
Well, and look at what the histogram is. You see how this is about to cross the zero line and turn gold?
Yeah.
That would speak for it going on up.
All right, one other quickie here before we switch. IWM. Obviously, people took the monies that they had in tech in the last few weeks. They took that out and they redistributed it over to the small caps. Small caps have got the best PE ratio versus large caps since 2000, which makes it a compelling story. That's why we had such a big spike. But what does it look like now?
2000 is a scary subject for me. Yeah. That was a big down year. But this looks like it's going to go on down to this attractor at 211, isn't it? Yeah.
210.
Which is the flat DMA. So it's the level at which prices didn't go any higher back through here. Same level here. So I think we're going to go down to that level. 211.
All right.
Well,
looks good. I'm going to switch it over to Adrian. Adrian, you want to show your screen and explain to people a little bit about how you help them?
All right, so Julie and I have been trading together forever, right? So we're like a husband and wife trading team, and we started in like 1995, 96 when we were working on our PhDs. So we are also, we're not mathematicians, we're statisticians. Our PhDs are sort of organizational behavior, behavioral finance. So we were looking at, how do you box up what's going on in the markets? And we've got a very defined system of how we trade over the course of the day. So pre-market, what we're looking at is Apple. So if you're looking at the screen here, you can see, Apple. In the pre-market, we're looking at what the order flow is doing. We're looking at where Threshold levels are this 225.65 was this morning's threshold, and then what we're looking for is a market maker sort of rebalancing on the open, right? So the options guys covering their bets, and we have a beginning of the day play that is boxed up based on where was the resistance, where was the volume by price cluster, first thing in the morning, and then boom, you're in and you're out on the inflection. The next thing that we teach people how to do, we train about 40 people a year. So we do 2 of these big income trading boot camps, and we do them down in Miami Beach because we found out that bringing people to California to do these at 6 o'clock in the morning is not what most people consider the gold standard, right? We teach them to trade opening gaps. So Tuesday through Friday, because those are earnings days, those are days that there's earnings announcements. We've got a big statistical model that we put out there. I called it Baltimore Chop for various reasons. It looks like an old Orioles play, spiking the ball into the ground and over the pitcher's head. And that's a mean reversion setup where we're looking for things that are out 2 standard deviations in terms of volatility for the day based on their gap. And then what we're doing is we're just saying, okay, 2 SD, you're out in the 95% confidence interval of the mean. What we're going to look to do is fade back toward the mean, and we're looking at a logical set of patterns. Tells us, when those are set up properly. And in our trading room, we work with the guys, primarily the guys who have been to the boot camp, but there's also people in there who just sort of kicking the tires. And then what we do is at 10 a.m. we take a break. So we just stop 10 a.m. Eastern. We say to everybody, let's just walk away, and we're going to come back at 11:30 Eastern. And what we do then is focus entirely on the Magnificent Seven. So the morning trades, the NYSE trades that are part of that around the horn trading plan, those are automated. So those things are just out there. They do what they're going to do. Those are trading NYSE. So they're, you don't have to, the only thing you're going to do if you get involved with them is mess up the trade. You just let them go. They've been hugely profitable over the years. We've got, the records going back to 2006 on the site on those, every single blotter going back to 2006. And those were all automated. So we know we don't have to be involved in order for those to go off, right? But then, what we do is we'll look at the Mag 7 and, like here we've got, Meta. And you can see that, what I've done over the course of the day today is we've gone and boxed this thing up and just said, where are the volatility bands? Where is price clustering? Where's volume clustering? Where's price lining up with threshold levels that we know are going to cause price to inflect? So this morning, for example, right, we were looking at a move back down into the blue pivot here. This is R1, first resistance. This, I don't have it marked, but I'm going to guess that that's probably a fib retracement, right? So it's probably a retracement from yesterday's close. Yep. So that's a 50% retracement from yesterday's low in the closing range up to today's high. That's something I look at, right? I just look at the 382, the 50, and the 618. As it retraced down through here, it comes up, hits our profit objective. And then our plan for the rest of the day revolves around, okay, on these swing moves, where is the anchored VWAP? So, you look at these thresholds. So from this high, right, down into this swing low, your anchored VWAP is up here around 488. I guess that's 489.12. 489.12 is sitting on top of this 488.94 threshold. We saw earlier support and resistance right there. We see it's bumping up here right now. So my next trade on this, I'm going to have an entry at 487.36 if it gets there. I'm definitely going to have an entry at 485.54 on the long side of the market. And then we're just looking to keep things inside the box, right? Always trading. We're day traders, and we've been doing this for a long, long time. And this is our primary living is focusing on these stocks, and we're going to trade these into the close. Same thing on Tesla, right? So if we look at Tesla today, you see it here, right? So you've got these swing moves And I just really like it when there's a lot of confluence between the things that I see on my screen. So when I see that there's a fib retracement trough to peak that lines up with a pivot line, or it lines up with one of the threshold levels, or with one of these volume clusters that we've got identified, then it's on my radar. We've got 7 to choose. I love the fact that we've got 7 stocks to choose from. And over the course of the afternoon, we might only trade 1 or 2 of them, but there's always something in play for us over the course of the day. This one again, right? If it gets back down into the blue pivot here, if it gets down into R1, you guys all know what pivots are if you're watching this, right? So the central pivot is just high plus low plus close divided by 3, and then the R1 and S1 and R2 and S2 are just derivatives of that. And that goes back for those of us who are unfortunately old enough to have traded before there was a whole lot of chart trading out there. Those floor trader pivots were really handy in trading, things like S&Ps and the NASDAQ, right? I mean, anything that you looked at, I guess you weren't really trading that much NASDAQ back then, but and then Qs, right? So here we're using this as sort of a lever arm for all of this stuff. So when I say confluence, if I'm looking over at Meta and it's coming down into that pivot line, and then I look over here at the triple Q and I see that we're lined up, right around the same time of day, this thing's sitting right on a major support. That just gives me, courage in my convictions to say, all right, we're going to go long, and we're going to look for a nice move, move higher on that. Same thing on the S&P 500. So that's it in a nutshell.
Sure.
People want to.
And when people get a hold of you, how do you inform them? How do they get more information on this?
Okay, so I do a live. So the best thing is, I tell people it's, we train a lot of people, but the best way to figure out if what I'm doing is for you is to watch. I do like a live stream every day where we just go through, and for our guys, we talk about, you can just go to traderinsight.com/live stream. And what you do is when you click on get free access there, it asks you for a text phone number, right? A phone number that you can get a text to, and an email. The text is just because the live stream is not at the same time every day. Gotcha. So if I've got setups and they happen at 11 a.m. Eastern, or they happen at 11:30 Eastern, right? It's when I'm going to go live. And we've got the benefit of Julie and I do a TV show called Trader Nation. So we've got a bunch of cameras in our office, so it's real easy for me to go, and do this thing, and it's a lot of fun too. So you can ask questions there, and if it's for you, then we can also give you, permission into our daily room. So we're there Tuesday through Friday all day, and Monday we're just there we start at 11:30 Eastern.
Perfect. All right, that's great, Adrian, and thank you very much, Michael. We're a little bit brief on time, but could you explain to people, how you're going to help them when they contact you and how to contact you?
11 o'clock a.m.
Yeah, I can help you by saying that tomorrow at 1 p.m. Eastern, 10 a.m. Pacific, I will be making my presentation within the program that David's going to be going. You're definitely going to want to either come and listen to me or catch the rerun, because yes. I am
Michael,
a day trader. Yes, sir.
Sorry we moved you to 3 p.m. Eastern time, right?
Okay, thank you.
Yeah. So.
And of course, the main thing, Michael, is to get your information and to find out more about you, how you work the trading room and all the stuff. Logicalsignals.com. Actually, and Traders Helping Traders.
You can go to tradershelpingtraders.com, and then there is a trading room tab.
Right.
Or you can email me at michael@mjf1, that's the number 1, partners.com, and make an inquiry. I will and am putting together a new type of a program where I do produce updates each day and a podcast over the weekend, and I post those on YouTube. And I'm changing that up a little bit, where I'm taking this exquisite intraday analysis that my colleague and I do together. And right now we're on the NASDAQ because we are day traders as well. And just to give any type of information, I have been trading since 1979. I have been an options market maker here in San Francisco, in London, in Amsterdam, Germany, and then back here in San Francisco. So I've been trading for a great number of years. I've been doing Elliott Wave for over 35 years. So drop in on my presentation tomorrow, which is at 3 p.m. Eastern, 12 noon Pacific, and you'll hear about my favorite indicators, which happen to be Elliott Wave and Fibonacci.
Perfect. All right. And as far as optionprofessor.com is concerned, that's my firm, Option Professor. I do have an options trading or options alert every week that we send out. And we specialize in a number of strategies, but right now the strangles, where you buy calls and puts on one thing right before you think news or events are going to really move the stock. Obviously, last week, Taiwan Semi was a perfect example of that, how the volatility can be very big on some of these things. So that's optionprofessor.com, and then you'll get the information on the options alert service. Thanks a lot for being here, Sonny, as always. Adrian, first time. It's great to talk to you, and you bring a lot of good information to the fold here. And then, Michael, always good to talk to you as well. So thanks, you guys, for being here. I'm going to turn it back over to David. And good luck and good trading, everybody.
Okay, yeah, great discussion. So, yeah, just a quick reminder again about the event that starts tomorrow. That's titled 30 Experts' Favorite Indicators. And actually, just a funny coincidence, I realized that all four of you are scheduled for tomorrow. So Adrian's on at 10 a.m. Eastern. Sonny, you're at 2 p.m. Eastern, and then Michael at 3 p.m. Eastern, and Jim will be at 6 p.m. Eastern. But we have a great lineup, 10 presenters each day, Tuesday, Wednesday, and Thursday. Again, you know, to join us, all you have to do is go to TimingResearch.com, and there's a link to join the room, you know, while we're live there on the main page. So yeah, just want to thank my guests again for today. Adrian Manz of TraderInsight.com, Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, Sonny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. And also, oh, just a reminder too, if you search for Timing Research on YouTube or your favorite podcast app or Substack, you can get the recordings and presentation archives that way as well. All right. Great show. Thanks, everyone.
Thank you, David. Thanks, Jim.
Thanks, David. Thanks, you guys.
Bye-bye.